I'm Dennis Klusman. For the past 3 months, it's been my privilege to lead LCEF's COVID-19 response team, as we've been working with LCEF borrowers who have required some form of financial relief in light of the effects of the pandemic on LCMS ministries. One of the tremendous blessings for our ministries during this time has been the availability of loans, U.S. Small Business Administration, the Payroll Protection Program, or PPP. Many of our borrowers and others within our church body requested and received PPP loans that were used to maintain payrolls and cover other related expenses. PPP loans have a unique feature in that after a short loan term, some or all of the loan amount can be forgiven. Many of our customers are at the point of applying for loan forgiveness, and we are honored to have with us today two representatives of the Small Business Administration to offer some insights on this aspect of the PPP. I'd like to introduce Dan Brown from LCEF's National Lending Team and invite him to introduce our guests. Dan has been instrumental in keeping LCEF informed about the PPP, and it's great he has developed a relationship with our guests that led up to today's conversation. Dan?
Thanks, Dennis. As Dennis said, my name is Dan Brown. I'm the Vice President of National Lending, so primarily working with RSOs within the LCMS throughout the country. Today, it's my pleasure to introduce two folks from the St. Louis District Office of the SBA, Maureen Brinkley, who is the District Director, and Tom Diber, who is the Lead Lender Relations Specialist, who have both been volunteering their time to help today with understanding the SBA PPP program, specifically the forgiveness process, which I know everyone is interested in. Maureen and Tom, thank you both for joining us.
Thank you very much, Dan. This is Maureen Brinkley. I am the District Director of the St. Louis Small Business Administration District Office. We're very pleased to be asked to participate in this program today. Dan and I started speaking several weeks ago. Just briefly, let me say this to you. I have been with the SBA over 52 years. And I have to say that what we have accomplished in the last 3 months as an agency, we've used the term unprecedented a lot. This has truly been unprecedented. I told my staff when COVID first hit, before we were asked to leave our office, that I've worked in many disasters, hurricanes, tornadoes, floods, but this is the first one that we had a disaster that we could not see. And because we could not see this disaster, it made it very difficult to deal with. But throughout working with our participants, our clients, and so forth, most of our work, aside from the funding, would be social work. So I'm very pleased that we've been able to do that. The administrator has said that we, over the period, first part of the PPP, we did 14 years of work in 14 days. But you will hear me say over and over again, if you read articles that I've written, that my work has become my ministry, because I see the work that we do change lives. It was good then, before this, but having seen the work and changing lives that we've done in the last 3 months has even overwhelmed me. I was desperate when I would see people standing in lines waiting for food because they did not have a job to go to. So I'm going to introduce the gentleman to you now, Tom Diber, who has been my office's hero and my hero, because he has helped every lender in Eastern Missouri and individuals get the money they need to get their businesses back started. So I introduce to you Tom Diber, our Lender Relations Specialist.
Thank you, Maureen, for those kind words. It's been my privilege to be part of this. I was in banking for 28 years before I joined the SBA a little over 7 years ago. So as Maureen said, this has been the most challenging time that we've had. We appreciate everyone's patience in working with us through this process. It's been a challenge. The analogy I use is I felt like over the last 2 months I've been working in the pit crew of NASCAR racing, but the cars aren't slowing down, and I'm trying to change the tires as they go. So the main thing is we focus on getting the money out to folks, and I think most of the comments and questions today will be related to the forgiveness part, which is how the program was designed, was to be able to provide the funding and then have the loans forgiven. So we're pleased and thankful that you invited us to participate today. And we'd be happy to answer your questions.
Great, thank you both. We'll, so we've solicited some questions from a lot of our ministry partners. So some of them will be general in nature, and we may have a few specific questions as well, but I'll get us started. What is the expected timing of when organizations will be able to start applying for forgiveness of their PPP loan and the potential approval timeline?
So most borrowers can start applying now. The original guidance was to be able to apply. It was an 8-week program, which has now been extended, and we'll talk about that. But basically, they can start applying after they've had the funds for 7 weeks. And under the Payroll Protection and Flexibility Act, that now has been extended to 10 months after loan approval. So you have 10 months after you've got the funds. One of the things to remember is you don't have to wait. I mentioned there's now a 24-week period that you can use the funds. You don't have to wait till the end of that period. You can apply as soon as you've got the funds available.
Great.
Tom, can you elaborate a little bit about the process? Do you need to work with the bank that made the loan originally? Do you deal with the SBA directly? How does that work?
Yes, what you do is you basically, the lender that made the loan to you will accept your forgiveness application. So you'll give them the application. They'll make a decision recommendation, submit that to SBA. So the lender has 60 days after receiving a completed application from the borrower. Then the lender looks at the information provided and makes a determination if the borrower qualifies for forgiveness. They forward that to SBA. SBA has up to 90 days to review that. Hopefully it'll be quicker than that. The SBA then will send funds to the lender to pay off that loan, and then hopefully process. If there is a balance left over, then the borrower would work with the lender to make the remaining repayment.
You talked about one change relative to the 24-week period. Can you maybe reference a few of the other changes in the most recent guidance that came out, like the change in the payroll cost percentage, the extension of the deferral period, extension of the loan term, some of the most recent changes or improvements?
Sure, be happy to. So originally the coverage period, which is the amount of time that borrowers had to spend the money to qualify for forgiveness, was 8 weeks. I think at beginning back in March, I think we were all hoping and thinking that 8 weeks would be plenty of time. Little did we know that here we are now 3 months later, and we're still battling through this. So the 8-week period has been extended to 24-week period. So 24 weeks basically is 6 months. So the lenders have made the loans, will work with you on forgiveness, but you can apply. You can still use the 8 weeks, but you have up to 24 weeks after you get the money. So basically 6 months after you receive the funds, you have the ability to spend those proceeds on eligible expenses.
And let me add that this was changed. Our administrator, of course, the Secretary Mnuchin went forward with this request because, like we said, everyone thought that in 8 weeks this would all be behind us and we'd be able to move forward. So it was only because of individuals and groups and organizations like yours that came back to us and said, hey, look, we're not reopening yet. We're not ready. We need more time. And we feel that there is an entitlement to the forgiveness. So this was changed only because of feedback from individuals and groups such as yourself.
That's an excellent point. Another change that was made was the change in the payroll cost. So initially, businesses had to use 75% for payroll. That has been reduced to 60%. So that provides additional flexibility as far as spending funds on. You can still spend up to 100% on payroll, but you can now spend up to 40% on other non-payroll expenses. The deferral period was extended, as I mentioned, so you got up to 10 months now after you receive the loan funds to submit the application for forgiveness. The loan terms were extended. Initially, PPP loans made before June 5th had a 2-year maturity. Those loans now have a 5-year maturity. And the existing loans that have a 2-year maturity can be mutually extended if the borrower and the lender agree to that.
Can you comment on FTEs? A lot of the PPP plan was designed to try to keep employment levels up. And tell us how long do borrowers have to restore their FTE count to whatever the baseline was that was used in the original application.
Yes, so the original program was June 30th. The short answer is now that businesses have until December 31st to return to their FTE level. So the measurement really is, and part of the forgiveness now has been changed so that it provides more flexibility for borrowers. So what happens is the borrowers will look at their FTE counts from the period of February 15th through April 26th. And during that period, then if they are able to restore their FTE count by December 31st, they would not have their forgiveness reduced. There are further availability safe harbors, if you will, if the FTE count cannot be reduced because the businesses were not able to open. So if they're able to document, which I think most businesses will be, that either from the CDC or Health and Human Services or state and local authorities were not able to open their businesses, that will be an acceptable safe harbor for not having forgiveness reduced.
So Tom, on that specific note, relative to FTE reduction exemptions, is there specific documentation that will be needed?
Yeah, so to obviously, if you've been able to maintain your FTE count, your number of employees, then you don't have to worry about trying to qualify for an exemption. But if you had to reduce your employees, the documentation that you're going to want to keep would be, for example, if you make a job offer to an employee and they refuse to come back, you want to document that. Obviously, if you've got something in writing or an email, I would put that into the file. If you had a reduction due to a firing for cause, you want to document that. If there's a voluntary resignation, document that. Written requests by an employee to reduce their hours, anything that you've got in your file to document basically personnel action would be good. If you don't have emails or written documentation, then at least what I would do is try to write down and document verbal conversations so you can at least support the communication there. And then also relative to the other exception, which is basically not being able to reopen any information you've got, notices from your county or local offices that said you have to close your business. I would put that in the file as well. That would also help support the fact that you were not able to replenish and replace your FTE counts.
In general, how many hours does someone have to work to be counted as a full-time equivalent?
From the SBA standpoint, the count is basically a 40-hour FTE. So if you work 40 hours per week, that is full-time. When you fill out the forgiveness application, you will have to identify each employee and whether they work full-time or part-time. If they're part-time, you can base it upon the number of hours they work. So if they work 30 hours of the 40, they'd be a 0.75 count. If you have a wide range of folks who are working 25%, 50%, 75%, you can also just use a 100% for full-time and 50% for part-time. And the businesses can use whichever is easier for them and is for beneficial. So you can use either method.
Has the deadline for new applications been extended?
No, they have not. So as per the CARES Act, SBA only has approval to extend PPP loans through June 30th of 2020. So the borrowers would have to submit that information to the lender, and the lender would have to process the application and submit that to SBA for approval by June 30th.
I will add, though, that we have a commitment from our Office of Capital Access that if a borrower an applicant gets to a lender and applies for the loan, and the lender gets it to SBA, SBA does have staff on duty that will do our best to get those applications input before 11:59 on June 30th.
What is the potential for additional changes, knowing it's a fluid situation? So should people wait to apply for forgiveness, or do you think most of the changes have already been applied?
Yeah, it's hard to predict what changes may happen because changes have been occurring almost weekly, if not daily, in the program. Borrowers have up to 10 months after loan approval before they have to submit the forgiveness. So if there's any questions or if they're unsure if they've met all the eligible expenses, I would use the longer covered period to make sure you have expenses in the eligible categories to qualify for forgiveness. And as of right now, lenders are still waiting for guidance as far as how they will process the forgiveness applications and submit those to SBA. So even if you turn in your application today, it's going to take a little bit of time before the lenders have the process in place to submit those to SBA, and they have 60 days after the borrowers provide that to submit that. So there is no rush. If you've met 100% of your forgiveness and you're satisfied with that, there's no reason why you cannot turn it in. But if you have any questions, I would recommend waiting a little bit of time anyway to see what the new guidance comes out, because there will be some more guidance and some more FAQs coming out to answer some forgiveness questions.
What do I do when my payroll period does not line up exactly with the 8-week period? I know you talked about the extension of the 24 weeks, but are those applicable expenses amortized over the 24-week period or the 8-week period, and how does that line up?
Yeah, so basically payroll costs are eligible for forgiveness on the date they're considered paid on the day that the paychecks are distributed to the borrower or that the borrower originates an ACH transaction. So that's when the pay costs are considered paid. To be eligible for forgiveness, it includes payroll costs that are paid and payroll costs that are incurred during their covered period. So that can be the 8-week period or 24-week period or something in between. When they complete their application for forgiveness, they will actually put in a date in of what their forgiveness date is. So that will be the ending date. So you can have payroll, because many times the funds are being dispersed by the lender, and if it's in the middle of the week, it's not going to line up with your payroll period. So any payroll that is paid during that your 8-week or 24-week period counts. And then also if it's incurred but paid after the end of the period, if it's paid on or before the next regular pay date, any of those costs that were incurred for those days' work that were in your period can also count toward your forgiveness.
What is the impact on the program as it relates to hourly employees who may be working fewer hours for whatever reason, and therefore payroll expense goes down over time?
Yeah, so the actual amount of loan forgiveness that the borrowers will receive may be less depending upon the salary and hourly wages of the employees during the covered period when it's compared to the first quarter of 2020. If the borrower restores the hours and hourly wages and salaries, the borrower can be eligible for eliminating any of the salary and wage reduction amount. The borrowers will complete a worksheet to determine whether to reduce their forgiveness for what they're eligible. But basically, as long as you complete the salary and reduction calculation, and if the salaries were reduced by no more than 25%, then you should be able to qualify for full forgiveness, even though you may have had some reduction in salary and wages.
What is your understanding of the tax treatment for the PPP loan amount?
The CARES Act provides for the debt discharge on the PPP loan to not be included in the gross income of the business for federal tax purposes. However, the IRS has issued a determination, which I know has been still being debated among Congress and others as well. That should change, but as of right now, the IRS has made a determination that those expenses that are used to qualify for a PPP loan will not be deductible on the borrower's tax return. So you will not have to include the income for the debt forgiveness, but you also would not be able to deduct the taxes on the expenses against your taxes. And also at this point in time, the SBA does have the 6-month subsidy payment available. As we understand it right now, again, it's still being determined, but if SBA is making the 6-month payments on your SBA loans, that income would be taxable at this point.
There are some questions out there about an issue relating to, and this is the phrase, access to other sources of liquidity. What is that all about, and how is it determined, and what impact does it have on loans and loan forgiveness?
So part of the program is to make the funds available, obviously, to folks who needed it. So when a borrower completes the application, they must assess their economic need for the loan under the guidance of the CARES Act and the PPP regulations at the time of the loan application. So although the CARES Act doesn't require the normal SBA measurement for that there's not credit available elsewhere to qualify for the loan, the borrower still must, in good faith, certify that the PPP loan was necessary for their business. And specifically on the application, there's a question in the certification that basically says current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So borrowers must make the certification in good faith, take into account their current business activity and their ability to access other sources of liquidity to help their business. The example that's used in the guidance is for a public company that has a substantial market value and access to capital markets, that they would have a more difficult time making that certification, because in theory they'd have access and availability to other sources other than the PPP loan. Now SBA has, based upon the above certification, is required to obtain the loan, and to further ensure that the loans are used to eligible parties. The SBA and Treasury has announced that any PPP loan in excess of $2 million will be reviewed for those certifications and for that need. So we recommend that the borrower keep on file their documentation and their information to support that certification about what was happening at this point in time, so that you can support what was happening in your business and why it was necessary for you to access that loan.
Tom, I'd like to follow up on that one. Many of our borrowers have access to lines of credit and the like through our organization. Would that be considered a significant source of liquidity?
I would say in general, what part of the goal of SBA is not to require borrowers to use up all their excess liquidity. So I think it'd be very reasonable for a business to say, I've got a line of credit that I need to support my ongoing operations.
How will bonuses be treated when calculating payroll costs?
Bonuses and hazard pay are allowable as forgivable payroll costs. So they can be included in the amount of payroll being applied for forgiveness, with the caveat is obviously limited up to $100,000 per employee.
Does the PPP limit the definition of rent to only real estate?
Yeah, the guidance actually says real and personal property, but we have not seen any additional guidance on what would qualify on that. So from my standpoint, taking the more conservative approaches, I would use the interest on real estate mortgage expense, and unless there's something additional come out about if you get a loan on equipment, for example, I'm not seeing anything specifically spelling that out. So I would, again, recommend the most conservative approach in using interest on real estate mortgages and LIBOR more, and because of the longer period now time, using the additional toward payroll and other detailed expenses.
Before we wrap up, do either of you have any further thoughts to share? And then certainly we also would appreciate direction on any place that our customers can go to find additional information on what we've discussed today.
I'll take that time. Yes, I mentioned to Dan earlier in the week that our guidelines change, if not daily, sometimes hourly. Every Monday we have what's called an operational field operations phone call. And because of feedback from webinars sessions and conversations, emails, inquiries from individuals such as yourselves. As a district director, I feed that information back up to headquarters, and that's what causes the changes that we've had, for instance, from 75% payroll down to 60%. So anyone can go to our website at any time, any day, and especially the Treasury, and see changes and updates.
Well, on behalf of LCEF, we certainly want to thank Maureen and Tom for your time today. The information that you shared will be very valuable for our customers and other ministries within our church body. You both are truly a blessing to your organization, and we pray the very best for you as you continue in public service. We also want to thank all who are viewing this conversation, and we direct you to resources that will be included with this recording for further assistance as you prepare to apply for loan forgiveness under the Payroll Protection Plan. Thank you very much and have a great day.